Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover BlackBerry stock because unfortunately we have been seeing down days lately. I'm going to cover some important dates, going to go over as to the reason why I think it's going down and as to why I'm not really concerned. Obviously going down in terms of share price is always not ideal, but I'm going to explain to you why I think it's not a big deal. If you own shares though, if you own contracts, it is unfortunate. That's the only downfall. But yeah, I'm going to share everything. Do keep in mind though, I do own shares in the company, so be aware of that while you're watching this video. And I'm not a professional, so please do your own due diligence and research before buying and selling. But before I get into that stuff, I'm going to go over some important dates. Fiscal year 2025 first quarter results will be on Wednesday, June 26, 2024 at 5:30 p.m. Eastern time. I will be live streaming that on my YouTube channel, and consider following me on X and YouTube to be notified when I do upload or live stream on my channels. Now, BlackBerry's annual meeting of shareholders, that will be the day before. So on Tuesday, June 25th, 2024 at 1 p.m. Eastern time. I'll also be live streaming that as well on my YouTube channel. And then we're at $2.29 US closed as of recent, which gives us a market cap, give or take, about $1.35 billion. Now, one thing is, obviously the share price going down is not ideal, but the reason I'm not too concerned is because yes, the share price is low, but given the partnerships, they have partnership with Amazon and AMD. They work with NVIDIA, Stellantis. Stellantis is one of the four top automaker. It is the fourth largest automaker in the world. They have a lot of brands, and they already work with them. And they potentially could be a customer for BlackBerry Ivy. Now, BlackBerry Ivy is a partnership, 50-50 partnership with Amazon. And given the partnerships and the 50-50 and the belief system that Amazon has with BlackBerry Ivy kind of stuff, because they seem optimistic, I don't think that this company, especially they have enough cash and all that stuff to operate for 2 years. I don't think this company is going to go anywhere in terms of just dying and going bankrupt, and we'll basically not see any returns. I think at one point we will see returns. And if, for example, if Stellantis does partner up with BlackBerry in terms of BlackBerry Ivy, right? Or not part, but like use their products, then that could be a massive win. But this is all just speculation. And at the same time, I'm not a professional, but these are just my assumptions. And that's why I'm not too concerned. Again, partnership with AMD as well, and works with NVIDIA. So I just see too many positives for the future, if that makes sense, for it to not like pay out in the end. And it going lower, yeah, it is unfortunate, but it can only go so low at some point. Now, I will say, in terms of going lower, the indications unfortunately show a little bit more downside, but then we could potentially bounce as well. Now, in terms of technical, it's not perfect all the time, but right now we're at a level that bounced off in 2001. So in 2001, we hit, you can see horizontally we're at it right now, and it bounced up to the upside. Has it gone lower? Obviously, it's gone lower before. We're looking at 2000, 2003, but this is way back. So you can't really base it off of these before, but they do reflect. Like, for example, I've shown before in my channel, this dates back since 2008, and we have a downward trend resistance line, but somehow it just held perfectly the whole entire time, right? And even bounce off. So resistance, bounce off it, like, yes, it could be coincidental. And here was during the BlackBerry Ivy Amazon partnership announcement, spiked, broke through, and then when it came down, it just bounced off the downward trend resistance line perfectly. So you can't really use the past history too much, like not use it, but don't rely on it too much. But sometimes coincidentally it just lines up perfectly. So be aware of that, I guess. So potentially we could bounce up, but the thing is though, yes, we could potentially bounce at this level, but the indications are pointing to the downside. Now the thing is though, what could be a saving grace is earnings is coming up plus shareholders meeting. So if there's major announcements during the shareholders meeting or in terms of the Q1 results. Now, Q1 results, I did post a video on expectations and all stuff. It'll pop up right about here. Highly encourage you to watch it. The estimations are on the low side. So it is easy to beat, but at the same time, I'm not expecting anything crazy. If anything does happen, I'm hoping that there's some good announcements or major announcements, and that could help us to bounce up to the upside. And then that would reverse the indications to the upside regardless, right? Now, one theory I have as to why we're potentially going lower, right? Because obviously, okay, that's all great, well and said, but why are we going lower? And in terms of short positions on the Canadian side, because it got updated, but on the US side, it did not get updated. Combined, we're roughly about like 9 point something percent shorted, close to 10% shorted, which is about 58 million shares, give or take. But the US side has not been updated, so maybe that shorted position has increased, but let's just say it follows suit as the Canadian side and its short positions has decreased. So therefore they've covered, and maybe we'll be at like 56 million shares shorted. We're at roughly about 579 million shares afloat. Yeah, 579.93 million shares afloat. But if the short positions are not increasing, then who is dragging the price down? And we saw massive volumes up on the first, not the first meme run up, but when Roaring King / DFV came back, who basically started the GameStop meme run up the first time, came back, retweeted 3 years later, which is the same time frame as this one, and we saw GameStop, AMC, and BlackBerry potentially rising up. So we went from $3 and something cents to $4.10, let's say, give or take. We saw an influx of new meme buyers, right? In anticipation that BlackBerry will also go up on the meme run, right? And then what happened at the same time is short positions did increase too. So we got pulled up and short positions dropped. Now, arguably, the meme new buyers could have sold obviously too, but I think a good amount of them held because I saw some massive orders posted on Reddits and so on and so forth that they bought and they could have been holding. And if they were massive orders that were holding, or collectively anyway, it was a good amount of shares, then arguably, if short positions are not increasing, and then there are other tools to short and then they still have to cover, but let's just say in terms of actually shorting, if they're not increasing, then who's selling here? I'm thinking, in my opinion, again, this is my opinion, I'm not a professional, so please do own due diligence and research before buying and selling, but I think it is the new meme, like people who bought in for the meme run up, lost quite a bit and they just don't want to keep holding and then end up selling. Now, this downtick first could have been a short position added to first trigger the drop, and then the second drop could have been just everybody else just saying, okay, forget about the extra losses, because depending on where they entered, let's say $3 and something cents, $2.29, they're losing about 30%. So 30% obviously is not ideal for newcomers and they want to sell. It's not ideal for anybody though, but I'm just saying in terms of you just got into the stock, you don't want to keep going down because you don't see a bottom. And the thing is too though, newcomers sometimes, not always the case, but are not really aware of what the fundamentals for the company is or the expectations or the growth in the future. And what could happen is they literally just bought it for expectation for the run up. And that happens all the time, right? Some people just buy the stocks for just the run up. They don't care about the fundamentals of the company and so on and so forth. But then when things get shaky, expectedly, they'll basically get out. And that's my theory. That's just a theory, but I think it's pretty much a drop from the newcomers because again, the short positions are not necessarily covering either too much. So we see slight coverage, but not enough to bring this share price up. But at the same time, not new addition shorts to potentially drop it, potentially. But we'll see when the data comes out for the US side, should be in the next couple of days. And then when you have just sellers of the old, not old, but like back in, what was it, in May something, we saw the run up. They're selling, increased influx of sellers, no buyers, obviously share price drops, and that's basically it. So we have seen volume increase, but it's only sells. And that's my theory. There is another theory, but the problem is it doesn't check out. The theory is potentially it could have been shorted, and the anticipation is, okay, it's already low. How much are they going to short it? They're pretty much holding it down for potentially if there was an announcement to come, or if earnings was actually going to be a massive beat. I don't expect a massive beat or anything, but some important news to come. Holding the share price this low is beneficial for one kind of trick. If you do know options, what could happen is they short it, they get benefits from the shorting side, hold it down, buy contracts on the upside. So when it spikes up, you cover your short position. So you buy back the shares, naturally bringing up the share price up. Those contracts multiply way more than just buying the share price. And you multiply your profits based off those contracts and sell those contracts off volatility. Not because if you're expecting some major news, right? Because I haven't seen any. So I looked up all the news I could find. I couldn't find anything, not even relatively new news at all. And a reason like news that could drop the share price. So if there's no bad news, it's either bad news that's coming, which I can't expect anything because I can't think or fathom of a bad news specifically because I don't expect them to go bankrupt because they have enough to run for 2 years. And then what other bad news could come out? Like basically it would have to be pretty bad for somebody to sell early before earnings, unless that's what I was going to say. Unless they miss expectations. But the problem is the revenue is already expected on the low side. So how much worse can it be? It could always be worse, but I'm thinking because it's already low, it wouldn't be a massive miss, if that makes sense. So there's that. So one thing I'm thinking is that maybe good news is coming. They artificially bring the share price down, but this is just a theory because it gets debunked basically. But it's not 100% debunked, but it's pretty much debunked. But what happens is they artificially bring the share price down, bringing down the call contracts prices. They buy the call contract prices at a low, cheap price premium. And then when the news comes out, share price naturally goes up. They cover their short positions as well, way before probably just the spike up initially, right, before earnings comes out or shareholders meeting. And then when the share price goes up with their initial jump, news comes out, jumps up even higher, their premiums go up. So now they could sell those contracts for way more of a profit and so on and so forth. But the problem is I checked the options chain. When I checked the options chain, yes, the implied volatility is high for the options contract, and it's over like 100%, which, to show you kind of context, GameStop is about 200%, give or take. And like I would look at Tesla, and it's about 50%. So BlackBerry is quite high. But those are the prices for I checked, right? The problem is the volume is low. So the volume is low, then I don't think that game plan that I explained is actually happening unless they bought the contracts beforehand. But if they bought them beforehand, then the premiums were higher a little bit. It would be ideal to buy them right now. So that's the problem. That's why I'm not necessarily relying on that theory. I'm more relying on the newcomers that only bought for the run up and no fundamentals. And then when things get like shaky, like anybody would sell basically if they're not aware of the fundamentals. So there's that. But that's basically it for today's video. I'll try to keep you guys posted as much as I can, especially when news comes out. But unfortunately, no news has been coming out. And that's basically it. If you did like this video and found it valuable, consider dropping a like. It does help out the channel, so thank you so much for that. I do appreciate it. And consider following me on X and YouTube so you can be notified when I do upload the videos. Thanks again for watching. I'll see you guys in the next one. Peace.